Hey everybody, Boris, Forex. Welcome to the crosses section for May 27, May 31, 2019. The story in the crosses this week is really going to be a bet on the fact that risk on sort of comes back. And the idea here is that I think, just from a technical point of view, because we don't have anything really of catalytic nature on a fundamental side except for the CAD data, which is really what I'm trying to weave into my crosses ideas. The idea here is that the yen technically is dollar yen, that is really at pretty serious support. And if that support holds, if we get a little bit of a pushback the other way, we have a reasonable chance here to pop back up. Now, the other trade that I like really also has a huge amount to do with just mean reversion. We are so stretched out on negative cable moves across the spectrum that, again, I'm just simply making a bet on the idea that we have the first sign of a bottoming and perhaps a move back up the other way. So here's sort of my ideas for the week. CAD yen showing some pretty serious support here and has this possible upside surprise with Bank of Canada being a little bit more hawkish than the market thinks. Gives us a chance to trade to 82s. Euro yen just simply looks good to me on the idea that euro's kind of held bid, and if the yen just sort of stabilizes at this point, we have a chance to just bounce back. And pound Swiss, of course, that's really the big one as a change to come back to moving averages that are so far away from each other they can't even see them on the charts. And as a matter of fact, let's start with pound Swiss first and just take a look at this particular candlestick here. Pattern, let me just actually move this down. So you're looking at the pound Swiss, and what you see here is this is the level here where we find a little bit of support here. This is the 126.50 level from all the way from 2018 November. But the more important point is here, look at how far stretched we are from the 20 and the 500. It's been a swan dive to the downside. 1, 2, 3, 4, 5, 6, 7, 8, 9, and then 10, 11. Sort of like this is really a false green candle because it ends up pretty much on the lows. It's a shooting star candle that just happens to be green. So ultimately, you have like sort of 14 days to the downside. A very, very, very one out of a decade type of it. This has actually been, I think, a once out of a lifetime event of continuous downward movements. It doesn't mean that it can't continue. It certainly is by no means guaranteed, but it sort of statistically shows that a bounce should be due. An interesting thing here, of course, in long extended downward moves in pound Swiss is that when you do get the first significant positive green candle, we have at least a modicum and sometimes a significant amount of reversal to the moves. So this is a very, very long downward move here. The first bounce is mild, but the second bounce is stronger. Here's another smaller sell-off. The bounce is pretty strong here. Here you do have a fake out, but here the bounce sort of holds and it comes back up. So whenever you have these sharp moves followed by a reversal candle, meaning that you have lots of sell-offs and then a green candle, at very minimum you have just a small extension, and sometimes you have a significant reversal of trend. Where this stands, anybody knows, but the bet here, in my opinion, at least for the beginning of the week, is that we have at least a small chance here, or not a small chance, but at least a chance for a small move away from where we're at, 27, 29, to at least maybe 28, maybe 28.50 before it sort of exhausts this whole mean reversion trade. Now, if it breaks the lows here, yes, all bets are off, but it's a relatively small risk on the lows, so that's why I kind of like this trade as a potential reversal trade. Let's take a look at the yen crosses. Let's take a look at CAD yen first. So CAD yen here, pretty clear bottoming formation. Now, this bottoming formation is essentially at support of the kind of post fat finger recovery. So we had this fat finger move where it dragged everything down. Then we had the recovery, and then we sort of held that recovery. That was the lows from the recovery that then moved on to a much larger, bigger move over multiple months. Here, we've come back, reversed this whole big move to the downside, but we've had support at 81, bounced back up. Now it's a secondary support at 81. So here it's a sort of a blind faith leap on the idea that this 81 support holds. Canada gets stronger. Yen, at very minimum, just stabilizes or perhaps even starts to rally, and you get a chance here for an upside move back up to the 82s. And a euro yen story is similar without any real serious catalyst here. It's just simply a technical trade in my opinion, because here again you have like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days without us making fresh lows, generally that's a decent signal for us to go the other way. We've tried hard to beat the 22s to the downside, have been able to hold the 22s off, and now a chance here to short cover and squeeze the shorts, perhaps to the 23s, maybe all the way down to 23s, 50s. So those are my 3 ideas for the week. Remember, it's a very slow start of the week, so nothing could kind of develop until probably Tuesday, but those are the chances for us as the week begins. Wish you guys the best luck, the best trading. Boris, over and out.